and on our radar is Apollo Tyres. Our take is that the MHCV segment is turning for the better. And both MHCV and NCV, as they turn for the better, the expectation in terms of tire volumes from the OEM segment should start picking up meaningfully. It's got a meaningful presence with 40,
Yep.
45% coming in from the tires. Sorry.
All right, Apollo Tyres, the stock's been doing well. Just as we move, the last tick on Sapphire Foods is something that we need to watch out for. The stock is ending at the high point of trade in an otherwise very wobbly market where the mid-cap index is down about 1%. Sapphire Foods, the street is expecting some sort of corporate arrangement between Sapphire and Devyani at some point. This has been the rumor for months now. So the price is telling you, let's keep an eye out on something that comes by. But let's wrap up on this edition of Closing Bell with the news of the market. In fact, let's start wrapping up. The Nifty going with a cut of almost 40 points, but it could have been much worse. There's a recovery of nearly 100 points from the lows, closing just closer to that 26,000 mark. The headline of the day obviously would be the rupee crossing that 90 mark to the dollar. The Nifty banks shown remarkable recovery led by the private sector banks. Public sector banks were still lower, and the broader markets. Out there, we had nearly 2,000 stocks which ended in the red for about 900 stocks which were in the green. Among the top gainers on the Nifty, we had the private sector banks and the IT stocks. On the top losers, we obviously had a couple of these FMCG stocks, Tata Consumer, we had Adani Ant, BEL and Shriram Finance.
Absolutely. I think on the mid-cap screen, overall pain for sure coming through, 1% lower on the indices. Two sectors stand out. A lot of profit taking in PSU banks, which have had a great rally for the better part of this year. So names like Indian Bank, PNB, all of them were down 4-5%. The PSU, look at the PSU banking index, it's shed 3% today. And aside of this was the capital market space. If we look at the final tally on stocks, then Angel won 5.5% lower, Motilal 3.5% lower, BSE itself falling 3%, and the MCX finally ended with a cut of about 0.5%. So not such a bad day for the large cap screen, but yes, pain in the broader markets.
We wrap up on this edition of Closing Bell, and stay tuned. Our special coverage on the rupee, which was the headline of the day, continues on the other side. Stay with us.
just that from BKC, the place
No,
where
I
you
don't
have
mind
to.
walking. That's what I thought. If at all it comes
Huh,
to it,
yeah.
I'll go to BKC
Yeah.
by
Cam 2?
metro.
HDFC Bank, Axis Bank, and of course the IT names that ensured that the losses in the first half of the session were curtailed. And then the recovery began. It was Infosys, TCS, Wipro, they led the recovery as well. And the private sector banks, HDFC Bank ending at the highest point of the day, ICICI Bank ending at the highest point of the day, that contributed to the Nifty recovery. Although the index ended in the red, there are no doubts about that. But we go into the penultimate trading session of the week, as in the weekly expiry for the Sensex contracts tomorrow, on a much positive note compared to what we were somewhere around 1:30 this afternoon, Ritu.
Well, and let's talk about what's been souring that sentiment, and that's the Indian rupee, which has now slipped past the psychological 90 per dollar mark for the very first time, hitting a fresh record low this morning, opened at 89.96 and then quickly slipped to that 90 level with little to no RBI support really coming in. We've seen a depreciation of almost 5% this year as foreign capital continues to flow out of India. That coupled with the trade deficit numbers, the subdued domestic equities, and importantly, the lack of any progress on the US-India trade deal, all weighing on the sentiment as far as rupee is concerned. The decline is also raising concerns across multiple sectors, but for some, there is a bit of an upside. Let's go across to our team of researchers who are standing by to decode the impact of the shift on key Indian sectors. But first up, we go across to Lata for her editor's take. Lata.
Well, first up, the support for the rupee came towards end of trade, late trade, not really end of trade, the last one and a half hours, with the market giving support. That's very important. It was not because the Reserve Bank lent a horrendous amount of, sold a horrendous amount of dollars at 90.29 that the rupee went towards 90.11 after that. It was because there was an exhaustion of selling. That's how usually bear markets end. But that exhaustion of selling was probably triggered because of the chief economic advisor saying that he's not losing sleep over the rupee's fall. I mean, is this not the best of times for the rupee to fall? Considering that, even if prices go up, we are not worried about inflation at this juncture. And that he expects a rebound very soon, probably next year. That was used as a trigger. But really, there was an exhaustion of selling also, because how many times do you sell over the same news? We all know about the October trade deficit. We all know that the trade deal has not come in. We all know that there is a BOP deficit for probably 2 years in a row. The BOP number for the second quarter came on December 1st, and that triggered the accelerated selling on 2nd and 3rd of December. But now all that is priced in. So with Reserve Bank and government both saying that, okay, let the market take its course, perhaps, the bears, the rupee bears came in and covered their rupee short positions, or the dollar longs were unwound. The market is now convinced that the RBI also wants a market-oriented solution to the trade deficit. Once you let the rupee cheapen, then obviously exports will improve because they're price competitive, and imports become expensive. Anything has to be multiplied by 90 rupees plus for a dollar, and that makes everything from textiles to t-shirts to pharmaceuticals more expensive to import. That's the best competition you can have for the Chinese flooding. By the way, we must remember, we keep talking about the dollar rupee. The rupee to renminbi used to be about 11 up until like a year ago. And now it is 12 rupees 80 paise to buy a renminbi. So that also is a protection against Chinese flooding. And finally, perhaps the view must also come to the market that a lower currency is actually a protection for the economy. It's almost like a rate cut. It gives domestic producers more breathing space. The message today is that the market has found its own level. That is why today's recovery of the rupee, albeit mild, is an important takeaway.
It's an important takeaway indeed. 90.19, the tick on the rupee. Lata, thank you for breaking that down for us. But let's now go across to our team of researchers to understand the impact of this currency weakness on various sectors. Reema first on the IT companies. Reema.
Thanks so much for that. So, before we get to INR depreciation, once again to reiterate that the Indian IT sector has been an underperformer. Year to date, the Nifty IT index is down 13%, though it started recovering from the 52-week lows. So, from the 52-week low, the index has recovered more than 20%, but it's still down year to date. And from its all-time high level, Hormus told me it's down close to about 18%. So, one of the drivers for the sentiment today is the INR depreciation. Typically, the simple math tells you that a 1% rupee depreciation benefits margins by about 25 to 30 basis points. But then again, it depends on the kind of hedge ratio companies have. But, outside of that, one reason for the increasing optimism surrounding or why IT stocks and shares are seeing a look in is the underperformance, and also now the AI infrastructure the global AI trade is moving from infra build out. They're saying eventually maybe that's going to peak out at some point of time. There is diminishing marginal utility, and the focus will shift to application services and maintenance. And this will unlock net AI revenue for the sector 12 to 18 months down the line. And plus, yesterday when we were talking to experts, they're saying assuming the Indian IT companies grow by 5-6%, plus you throw in a dividend yield, that makes it fairly attractive, and therefore it's time perhaps for to take a look in at the sector.
All right, so that's the IT sector. Next up, we have Sonal, who's tracking the impact on both oil and gas and the chemical company. Sonal, take it away.
Thank you for that. Well, it's a mixed impact on the oil and gas space. Let's start with the crude producers because they tend to see realizations in dollars, so it'll be a benefit for them. For every 1 rupee depreciation, they will see an improvement in their EPS by 1 to 2%. This is ONGC and Oil India that I'm talking about. If we talk about Petronet LNG, their regasification margins, basically they re-liquefy the gas. These are dollar linked, so every spread that they earn on that will be beneficial for them, and that could improve their EPS by 1 to 3%. For oil marketing companies, it will be a mixed bag, but do remember that refining margins will see an improvement because diesel cracks, petrol cracks, they are doing really well right now, but they also import a lot of crude. So it will be an impact of 11% on their EPS positively right now, considering the macro situation that we are in. For city gas distribution companies, it will be a negative because they do import LNG, and that is a big part of their overall input, and that will have an impact of around 4 to 11% on their EPS, be it Gujarat Gas, Mahanagar Gas, or Indraprasth Gas Limited. For chemicals, the basket is huge, but specific stocks which tend to benefit because they are big exporters to the US, something like an SRF Limited, Naveen Fluorine, Atul Limited, all of them have big exposure to the US markets, and they tend to benefit because of this depreciation that has come by.
Sonal, thank you for breaking that down for us, for the OMCs, for the upstream companies, and for the city gas distributors, and for the chemical companies as well. Now, from a whole host of sectors, moving to pharma, Ekta is here to tell us about the impact there. Ekta.
Well, yes, the overall feedback with regards to the rupee depreciation and the pharmaceutical companies is that it is short-term impact, and the impact of the rupee depreciation is limited, but could be largely positive dependent on the mix that you have when it comes to exports to other countries such as the US, along with the imports that you import, such as APIs. Now, most of the Indian pharma companies hedge their USD exposure at this point in time. There hence will be a temporary gain in terms of realization of export sales, and prices are later renegotiated to account for the depreciation. Input costs will be something that one needs to actually look for. It is possibly around 40 to 60% of sales for some companies, but how much of that gets negated based on the mix that they have in terms of exports is something that each company would have in terms of a different mix. Largely, you will expect some amount of negotiation which will take place with vendors going forward to account for the rupee depreciation. But as of now, when is this possibly going to tangibly show in terms of the exports as well as possibly in terms of the inputs is most likely towards Q3 and Q4.
All right, so more of a temporary impact as far as the pharma sector is concerned. Next up, we have Sudarshan. Sudarshan, how is it looking for the automakers?
It's not really that bad news for the auto sector, especially from two-wheeler names. TVS Motor and Bajaj Auto are the biggest beneficiaries. For TVS Motor, 30% of their total volumes come from exports, and to total revenue, export forms in the range of 25 to 26%, so they are expected to benefit. Next name comes is Bajaj Auto. Almost 50% of their revenue comes from exports, and in Q2 FY26, dollar realization was 87.10, and they did gain on that front. Now in Q3 FY26, I did the calculation of last 2 months, and now the realization has increased to 89.10, and the management, while talking to CNBC TV18 today early in the morning, they said that if there is a fall of 1 rupee, it improves or it lifts annualized EBITDA by rupees 200 crore. So now with realization increasing to 89.10, the positive impact can be in the range of rupees 350 to rupees 400 crore on annualized basis. Coming to auto ancillaries, 3 names I have taken: Bharat Forge, Samvardhana Motherson, and Minda. So for Samvardhana Motherson, rupee fall is marginally positive. So 65 to 70% of their revenue comes from export, but they have manufacturing base in the Europe and the US. So costs are also going to increase. So that will be offset by the cost increase. So benefits will be offset by cost increase. Coming to Bharat Forge, almost 60% of their revenue comes from the export segment, and they majorly have three segments: forging business, PV and EV components, and Class 8 truck orders. So they are going to be the biggest beneficiary as far as auto ancillary package is concerned. Last one is Uno Minda. Rupee fall is going to impact negatively. It would be a negative impact for Uno Minda because for them, majority part, or say 70% of their total revenue comes from domestic segment, and they are dependent on imports of the components. They import chips and whole host of other components. So costs are going to increase, and it will have a negative impact. But overall, it's going to largely have a positive impact as far as auto sector is concerned.
All right.
The softly devaluing rupee is very beneficial, as you said, to a company like ours, which has got almost 50% of its revenue coming from international sources. So it's very, very helpful. Well, on an annualized basis, every 1 rupee creates a EBITDA impact of 200 crores plus, because our exports are over $2 billion.
Okay, on that note, we're going to slip into a short break, but don't go anywhere. We'll get you what experts have to say about the depreciating Indian currency. Stay tuned for that and more.
Welcome back to this Rupee special show. But before that, let's take a look at the big newsmakers of the day. E-commerce platform Meesho's 5,000 crore rupee IPO was fully subscribed on the first day itself. Retail investors have shown a strong interest in the offer. Their portion is subscribed almost 3 times. The quota allocated for non-institutional investors has also been fully subscribed. The e-commerce major raised close to 2,500 crore rupees from anchor investors ahead of the IPO. Now listen to what their management had to say.
We as a company look at free cash flow as the right bottom line metric. Any company textbook definition of valuation is the net present value of all your future cash flows. And as a company, we've been the most capital efficient asset light company, right? Like to kind of reach a lot of milestones in our business, we've actually spent the least amount of money as compared to many other e-commerce companies in India. And we take pride in that. We continue to kind of optimize for free cash flow. If you look at the last 2 financial years, we have been positive on free cash flow. For the last financial year 25, we generated almost 1,000 crores of cash. And even forward, I think we will continue to kind of keep looking at that while doing capital allocation within the company.
If you look at the use of proceeds, we are raising these for the next 3 years. I think that is our estimate of, what is the spend going to be in some of these headers for the next 3 years. And if you look at the historical trends, as we have grown consistently, some of our fixed cost base, such as our server infrastructure and other kind of fixed cost line items, including employee cost as well, have not grown at the same path or at the same pace as our overall top line growth has been. So operating leverage is a key metric that we would kind of keep tracking. Our fixed cost base, let's say historically, the server cost grew by only 4.5% when we grew at about 35%. And we'll keep maintaining that going forward as well.
All right, and other news, the Cabinet Secretary has called for a meeting of Finance and Telecom Secretaries on Vodafone Idea's AGR dues, that case tomorrow. Now, sources tell us that the Finance Ministry is going to hold an internal meeting today on Vodafone Idea ahead of the meeting with the Cabinet Secretary tomorrow. The Telecom Department Secretary is also likely to be present at this meeting at the Finance Ministry.
And continue to focus on the currency. Earlier today, we spoke to former MPC member and economist Ashima Goyal and V. Lakshmanan of Federal Bank as the rupee has now declined 5% to a record low of 90.29 before that minor recovery towards close. The backdrop for an RBI policy due on Friday. Listen into a slice of that conversation.
Well, the MPC under flexible inflation targeting is not supposed to look at the rupee, only at inflation and growth. And I think last year there was very little movement in the rupee. And this regime, they have taken the call to let it float with market movements. But preventing the old for a long time, RBI's policy has been to prevent excess volatility and persistent real misalignments. So I think they still come in when it is getting too far away from equilibrium. So, and this regime is working. They have reserves and other ways of intervention. So the interest rate is not tied to the rupee. The interest rate has to respond to domestic inflation and growth.
Okay, no, I agree that the Reserve Bank and the MPC members have repeatedly said that they are an inflation targeting central bank and it will be governed by domestic factors of inflation and growth. But this is dramatic enough to upset growth calculations as well. It will impinge on inflation to some extent because imported elements are going to become expensive. So it's not that it doesn't have a macro impact, and it's also a financial stability question now. When given the rapidity, it's a 2% fall almost since November 18th. When the October trade deficit was announced, we realized it is a 1-month high, and since then it's been a near 2% fall. So won't this make the currency take center stage because of financial stability issues?
I have seen always, crises like the global financial or taper tantrum, that it passes. And there is a reversal of the outflows. And most of these outflows are driven by global events. Mm-hmm. And the reserves are used and other policies are used to smooth rupee volatility. Mm-hmm. And then whatever loss of reserves there is made up later on.
Okay. So
I don't think there is any sort of major financial stability concern here.
Just yet. Okay. Mr. Lakshmanan, what are your treasuries awaiting from the Reserve Bank? Will you all want a statement from the RBI governor on the currency? Will a rate cut make it a little worse? I mean, I know people don't come to us because of the rate differential, but in this year, debt flows are positive, equity flows are negative. Will a rate cut make even debt flows negative? Can that be a fear?
Yeah, so thanks for having me here. Firstly, alluding to the point which Madam Ashima Goyal said, one, RBI has, of course, never really brought in currency as a core factor in its monetary policy statement dissemination. A side eye would always be there. To which extent the policy will definitely take cognizance of that, and to which extent a rate outcome that's going to come later this week will definitely be looked into. Having said so, in as much as we as bankers may wish a commentary on the currency to be brought out, I would state that yes, the fact that the rupee has weakened above 90 would be noted, but the policy statement would clearly again hinge upon the broader parameters of inflation and growth in the wider statement that's going to come by. And that is, I think, is going to be
What kind of a statement? What kind of a statement are you expecting, Mr. Lakshmanan, from the governor on the rupee? What kind of a statement can boost or help the market, you think?
No. So one, again, as I stated, I don't think there's going to be a boosting statement coming in from RBI in any manner on the rupee. Okay. It's just going to record the fact that the rupee is weakened beyond 90 in any fashion, if at all, to the maximum. Nothing beyond that, in my view.
Okay, and on that note, we're going to wrap up this special show on the rupee depreciation. Thanks so much for watching. From Hormaz and me, it's a goodbye, and thank you so much for tuning in. Stay with us. More news and updates will continue after this break.